All right, folks, Tim Davis here. I just want to drop in here and give you guys a quick recap after we had the CPI data came out. I'm gonna start with the VIX, and I pointed out on the last video, I think it was Monday, that the VIX was at a point of support and that the overall markets were at a point of resistance, and all we needed was a catalyst. And look what happened. The CPI gave us a catalyst. So I said that the VIX was about right at a level of support and possibly going to get a bounce. And it looks like the VIX is getting that big bounce. Look at this solid green candle on the VIX today, folks. Solid green candle on the VIX leads me to believe that we are definitely headed back towards the upper range of the VIX, and possibly over the next couple of weeks, we could see VIX top that level that it pulled back from, say, back in May of this year, where we were right around 36. We could see the VIX finally get back up towards that level over the next couple of weeks. Let's see how that pans out. But VIX is in a nice strong move up now, looking at the daily chart, especially with that big green candle that's starting to form now, heading back up towards possibly the upper range of that channel. Looking at the full stochastics, we got that bearish to bullish crossover. And with the oscillators. So then they're starting to point up. RIMS percentage pointing straight up. RSI pointing straight up. We are in a bull cycle for the VIX. The VIX is ready to really continue to head higher. So the next couple of weeks could be very detrimental for our markets. Next week is Fed meet next week. So next week the Fed could do what they didn't claim they wasn't going to do at first. They could actually raise interest rates next week by 75 or even 100 basis points, looking at the hot CPI data that came in today. So we're going to see how that pans out. Markets definitely don't like what the CPI data report was, and they definitely don't like what the Fed probably reaction is, because the Fed's ultimate goal is to bring inflation down. So they're going to do whatever they need to do. They already reiterated that. They're going to do whatever they need to do in order to bring this inflation down. And it might take a while, but they're going to use tools that they have to fight this inflation. Even if that means, continuing to raise rates aggressively until they start to put a dent in this inflation. And if that leads to recession, the Fed is willing to take the pain now. So that's it. We should continue to see maximum volatility in these markets, folks. So that's daily chart. Daily look at the VIX. Let's look at the S&P 500. And again, we got that rejection that I was watching for. Right at the 20-period moving average. On the daily, price action was up just above it, just a tad, and then got that rejection. So price action is heading down. Now, next key levels we definitely want to be paying attention to over the next week or two is the June lows. Okay. If we take out those June lows, folks, I'm telling you, the market's going to be really in store for something that I've just been saying for a while, that we're probably going to eventually head to test the 2020 lows, folks, over the next 6 months to a year. So this is the next level. I think that for now, the markets are going to want to first test, which is the June lows. So we'll probably head to test the June lows probably over the next couple of weeks or so with this strong move down and this rejection at 20-point moving average now. So the next couple of days, maybe over the next couple of weeks, we could see price action attempt to test those June lows. Then eventually, but when we break those June lows, I think we will break them eventually, maybe before this year's out, we'll start to head back down and drop below the highs we saw in 2020. And then over the next course of the next 6 months or year, so possibly head towards the lows we saw in 2020. So this bearish market is definitely, folks, is in full effect. We're still in the bear market. And every rally that we see, the bears are going to find a way to fight those rallies off after price action hits an area of resistance, and then the bears are going to reverse this market and trap a lot of folks. So just be mindful of that and be careful trying to trade this market in a bullish fashion when we're in a bear market. So that's a look at the S&P. Want to glance at the Dow Jones. Dow Jones now down over 1,150 points, right around that level. And again, same scenario, rejection at that 20-period moving average, as I spoke of on yesterday morning, and now heading back towards the June lows for a possible test. This could be very quick, folks. We could see, even with the route we got seeing right now, it could be a follow through. And we're just on Tuesday. It could be a follow through for next rest of the week, and we could see a test of those June lows this week. That's a possibility, so keep that in mind. That is the Dow Jones. Let's look at the Russell. Again, same scenario. Now the Russell, if we step back and take a look at the weekly chart of the Russell, the June lows actually brought the Russell right back to the 2020 highs, so 2020 highs. June lows made it back to that level and got a bounce. The Russell got a bounce at that level back in June. So if the Russell tests its June lows and break it, it'd then be below the highs in 2020 and on its way back down towards the lows of 2020. So that's something to really pay attention to. I think that Russell is going to be the first one to break that level of resistance or that level of support that Russell bounced from in June of this year. And if we break the level of support that Russell bounced from, it's actually going to trigger price action to move below. It's kind of like this for you guys. Price action to move below these June highs right before the market started to collapse. And then we'll be in the cycle that we were in 2020 already in the Russell. So that's a possibility. We could possibly see that very, very soon. Look at the full stochastics on the Russell. Straight bearish. It's in a straight bearish direction. Wins percentage, straight bearish direction. RSI heading the same way. So again, the Russell, look for the Russell to possibly break support first and then start to head towards the lows that we've seen in 2020. All right. So that's something to pay close attention to, folks. I just wanted to step in here to show you guys that this is a massive sell-off that we had after this massive CPI report that was not unfavorable towards a bullish narrative of the markets. And then next week we had the Fed speak. So will the Fed raise by 75 basis points instead of 50 basis points, which is what they were mentioning over the past month or so? They're possibly going to raise at least 75 basis points, possibly. And there's a possibility it could do 100. So whatever the case may be, the markets already know that the Fed won't be slowing up anytime soon. So with the Fed continuing to be on track to continue to raise rates over the next several months or so, markets are probably not going to be in favor of that. So we're going to still see a lot of volatility as the markets continue to trend downward in this bearish market. All right, folks, I think that's all I wanted to share with you guys. Wanted to drop in here real quick just to little quick update as to what price action is doing and what it's showing us. This sell-off is intense. And again, I think that intensity is going to continue probably over the next couple of days, maybe the next several weeks, maybe the next couple of months, folks. I mean, this sell-off is just, I said, we are in a bearish market. We are probably in a more dire circumstance than we were in 2008, folks. That's what I believe. So bears are really going to enjoy this downward pressure after these big rallies over the next couple of years or so. All right, folks, all I have to offer for you guys today. If there's anything else present that pops up, I will pop back in and try to keep you guys updated and give you guys another quick and short video. Enjoy the rest of your day and have fun trading this bearish market.